The IRS Form 1099 INT is a document used to report interest income earned throughout the year. This form is typically issued by banks or financial institutions where individuals have savings or investment accounts. For instance, if you have a savings account at a bank, the bank will pay you interest for keeping your money in that account. And at the end of the year, they will send you a 1099 INT form showing how much interest you earned. You will then use this form to report the interest earned on your tax return. The 1099 INT is filed by entities like banks or financial institutions that pay interest to investors, and it should be used to document amounts over $10 paid to an individual from sources such as a savings account, or dividends of at least $600 paid in the course of a trade or business. If you did not receive a 1099 INT but know you earned more than $10 in interest, you should contact the issuing institution, as not receiving the form does not excuse you from paying penalties and interest on unreported income. Additionally, if you receive the form after you have already filed your return, you can file a Form 1040X to amend it. It is also important to note that if someone had foreign tax withheld on their interest or had federal income tax withheld due to backup withholding rules, they should receive a 1099 INT. The deadline for sending 1099 INT forms to recipients is January 31st, and a copy should be filed with the IRS by February 28 or e-filed by March 31st. To avoid confusion, it is helpful to understand the difference between a 1099 INT, a 1099 DIV, and a 1099B. A 1099 INT records income earned as a result of lending money, whether to a bank through a savings account or to a company through the purchase of a bond. A 1099 DIV documents dividends, or income earned through the purchase of stock. A 1099B records capital gains and losses incurred as a result of the sale of an asset, such as stocks or bonds.